Good morning. It's the 1st of April. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare and Jamie Pakenham-Walsh. Good morning, gentlemen. How are you?
Morning. Very well, thank you. Glad it's Friday.
Good. Yes, absolutely. Been wading through Twitter this morning, just trying to dodge the April Fool's jokes. There's many out there this morning.
There's a few.
Either of you fallen foul of any of them?
I did actually get caught by one. Let me see if I can share it. And I looked at it and I didn't even. It's a new tapped cocktail. Tapped cocktails they deliver to your door, which is brilliant when you're sort of like in desperate need within a few hours. They come out with a pickle version of a tapped cocktail, which is a little bit. Just feels a little bit sickly, but yeah, a new announcement. We've got get this limited deal before it's gone. So the play on the word deal. Yeah.
How many did you order when it just wasn't going through to the basket?
No, yeah, exactly. I just couldn't click anywhere to order it. So it was really annoying. Tina loves gherkins or wallies or dill pickles. So yeah, that's
He was thinking, right, we're sorted there. There's a birthday gift.
I was thinking anniversary, birthday, everything rolled into one.
But hook, line, and sinker there, Steve.
Yeah, I know. Got it. And did you get any? Did you sort of like?
No, I was sort of wary of it because I was someone on the radio last night talking about it. So yeah, just taking everything with a pinch of salt. But there's a few good ones out there that I saw.
I mean, in this world of false news, I think it becomes a little bit scary. I mean, I was going to sort of like come up with this this plan today of sort of like at the end, just saying, "Oh, have you heard of the new futures contract on air?" That you sort of like you just like they bag it up into like certain bin liners and things like that, and then they're creating a futures market out of it. And then I was going to sort of like create a chart, but I thought that's going to let me step too far.
Yeah, you don't put that much effort into your day job, so
exactly. That's a worrying fact. That's worrying. Dear oh dear.
Okay, lovely. Right, well, let's get into some real headlines. Hopefully, our journalist has not stitched us up with anything in here this morning. I think it all looks pretty kosher. So obviously, Ukraine peace hopes been put in perspective over the last 24, 48 hours. The rhetoric surrounding the situation remains generally less positive, with further evidence that Russian forces were being redeployed rather than withdrawn. There were further expectations that Russia would tighten its grip on the southeast, which would increase the risk of long-term stalemates. There was a humanitarian convoy that was put in place but was unable to reach Mariupol to get people out, which is obviously very sad. It was the final day of the trading day of the month yesterday. There was choppy trading going on to end the quarter, particularly as it was the end of the Japanese fiscal year as well. Global equity markets overall moved lower, while US bond yields also retreated. In terms of data today, it is a pretty busy one. We've obviously got non-farm payrolls a little bit later on. But ahead of that, we've actually got the Eurozone inflation data. That's due, I believe, 10 o'clock today. And we're expecting another strong increase in the headline rate to 6.7% from 5.9%, which we saw previously. A higher than expected rate would further increase pressure on the ECB to take further decisive action on monetary policy. The ECB are meeting in April. We don't have any central bank meetings planned for the Federal Reserve or the Bank of England, so that's worthwhile bearing in mind. As I mentioned, we've got the US jobs today. Obviously, normally a big number, usually creates quite a lot of volatility, so do be careful if you're looking at anything on the markets today, particularly linked to the US dollar. The consensus forecasts are for an increase in the non-farm payrolls of just below 500,000, with a small decline in the unemployment rate to 3.7%. So we'll be keeping an eye on that come 1:30. And finally, oil prices continue to remain vulnerable. They were on the defensive yesterday as President Biden confirmed a substantial release of the US strategic reserves. The US will release 1 million barrels per day for the next 6 months in an attempt to cap prices. So we'll have a look at the charts shortly to see if that's had any short-term impact. So that's, I guess, a good point for us to segue into the chart. Steve, is oil Top of your list today?
It certainly is. And I know you sort of gave a reason, maybe that the oil price remains vulnerable. I think it remains vulnerable because Steve O'Hare placed it as a gun-to-head trade yesterday. However, it shows you how placing stops is very important because, but it can have a negative impact on it because I placed my stop way too tight to this trade idea. Even if I'd lifted it a little bit, I could have still got a 3-to-1 risk reward. So I was a bit greedy on the whole trading strategy. Went for a 4-to-1 risk reward. If I'd gone for something smaller, potentially it could have been reached on the sort of like first dip, which got down to 99.30 area. However, you sort of like you roll the dice and you go for it. Not that sort of like sounds like it's just gambling. I'm sort of like it's an educational piece. This, yeah. So I got stopped out on that, and overnight it did come down and hit the target, which was around about this level that we saw on the 29th. So a few days ago we saw the same level, and we've got a nice little reaction from here. These two candles look like reversal candles, so potential for a bit of a pullback. So I won't be adding that to my gun-to-head trade ideas to sell again just right now, but would look to sell a rally. So yeah, definitely oil under pressure. And gold also on the short-term charts saw a nice move higher over the last few days. However, we saw a shooting star candle on the 6 o'clock candle yesterday, and from there we formed an evening star formation and have regressed lower. So again, last hour it's picked up a little bit, but support coming in at around about the 1930 level looks vulnerable at the moment. Further downside possibly there. Cryptocurrency, that's had a bit of a turnaround. We talked about this week, and again, this is another typical example of having the stop too tight and really sort of like getting a bit greedy. 4-to-1 risk reward here got taken out. If that was 3-to-1 risk reward, stop would have been a bit higher, would have stayed in the trade, and it played out really nicely. We saw the prices break below this sort of support that we had around about the 46,700 to 46,600. Once it's got through there, it's played out really nicely.
Steve, as preempting patterns as well, maybe. Guilty
yeah, that's very true. That's it. Yeah. Good shout. This was the head and shoulders pattern. Really, you should only sell this on a break. So if we had done this, obviously we had a gun to a head. If we had sold this on the break, we would have got in here. But again, you still got to then place your risk at the right level.
Would have been difficult. Pretty choppy in there, right?
Yeah,
in that right shoulder.
Definitely. I mean, you can still get maybe a 2.5-to-1 risk reward. Maybe you could put your stop above the head, and you can sort of like squeeze a 2-to-1 risk reward out of it, but that wouldn't have hit yet because it's got down here. We always like to sort of like say have a minimum of 2-to-1 risk reward on trade ideas. That means you only really need to get over sort of like 35% of the trade ideas right. Excluding costs. Think about costs as well. So yeah, that looks under pressure. It's reacted quite nicely from these previous support levels, which we've sort of like started the move higher from. So there's a range here of support. If we get a break down below 44,000, that opens up further downside. The main sort of like market I was looking at today, and this will come into my gun to head trade idea, is the Nasdaq. So we talked about the market sort of like equity markets moving higher again. This looks like a couple of days ago we posted a bit of a stalling candle on Nasdaq. Looks a little bit like a hanging man candle, which is negative. And yesterday that sort of like played out, and further downside was seen. We've talked about the momentum stalling ever so slightly. The range is sort of dropping on this rally, so a little bit of less enthusiasm in this move higher, and really picking up on this weekly candle. So looking at the longer term chart, the weekly candle stalled around about the same level, same high as the week of the 31st of Jan. So almost to the tick, 15,270, and the reversal lower. This is a shooting star candle. So if we do get a close around about these levels, and preferably a little bit lower today. So thinking about non-farm coming up, quite a volatile event, this will form a shooting star, and that could open up decent potential for next week on the downside of Nasdaq. So yeah, looking at the hourly chart, bit of a bearish flag forming here. The market sort of stalled or around about support, moving slightly higher, ready to sort of like, again, I'll be on the gun to head trade idea. I'll be preempting this this little flag formation, which looks quite nice at the moment. So really, you should wait for the break of that. It's confirmed on a break of the low of the flagpole, and then you've got a nice measured move target, which you can draw in of something like this. There you go, and that's got a measured move target down towards 14,650. So yeah, might use that as a gun to head.
Okay, interesting. You've given it all away too soon there, Steve. But
yeah, someone else is going to jump.
No one's going to be
they?
interested in watching the rest of it now. You've
There you go.
Get that off quickly. Okay, let's have a quick look at FX ahead of non-farm payrolls today. So dollar index still within this bullish channel. Yesterday we saw a decent recovery from the support zone that we've got here at 97.72. Not quite an engulfing candle, but a pretty decent reversal nonetheless. And we are moving higher again today. On the Euro USD side of things, we did actually see an engulfing candle. So we popped higher over the last few sessions, but engulfed all of those gains that we posted on the 30th of March to close lower on the session. In fact, that's actually a bearish outside day candle as well, and we're moving lower again. So potential for this maybe to be a bit of a bearish flag and may signal a continuation lower if we get a break below the lower end of this kind of wedge formation that's taking place on the daily chart. So still bearish overall. As you can see, the trend remains very much to the downside. So looking for further declines on that. And then finally, take a look at cable. Just to wrap it up quickly on the FX market, still failing to overcome this resistance at 132.70. Yesterday, pretty indecisive overall. But the trend remains lower, so still looking for lower prices there. And while the dollar remains positive and bullish overall, I don't see there being any sort of shift in the dynamics with this anytime soon. So yeah, short and sweet today on the FX markets, because all could change later on today with these bits of data that are due out. Jamie, what's going on in the stock world? Anything taking your interest this morning?
Yeah, so I thought first we'd just kind of check in on our Head and Shoulders machine Neo, and have a look at kind of how it reacted from the levels we talked about yesterday. So we had this shooting star type candle, and as Steve pointed out, we also had this inverse Head and Shoulders pattern. We didn't see a break of the resistance yesterday. I actually did kind of follow through to the downside. So at the moment, that pattern is potentially still in play, but we'll have to wait to see if we do get a break to confirm it. I just thought we'd have a quick check in there. But what I really wanted to talk about today was, again, I'm on my kind of confluence. I'm talking about my support and resistance levels. So this is Bank of America. And what interested me about this stock is, again, what I look for when I'm kind of planning potential trade ideas is I look for a confluence of factors and multiple things to be going in the direction of the trade for me to kind of be taking it. Now, this isn't actually one I saw at the time, but looking at it this morning, I thought that was quite a nice level. As you can see here, we were in quite a nice uptrend. We had this support level here of about 43. But once we had this breakthrough, we had this significant low post at 38.17. I drew a fib level, and you can see it ran quite nicely back into this 50% fib, which coincided with closing below. It kind of almost got above the 50 exponential moving average, but it did end up closing below it. And again, it was right back into this previous support turn resistance level. So that would have been quite a nice one. Maybe someone out there kind of got on that and saw that before I did. But that was quite nice. And obviously, we've had this extended move to the downside now. So we'll see how that plays out. Lastly, I was going to have a quick check-in on Micron. I know this is quite a popular one. And there was a couple of things I just want to have a quick look at here. Firstly was, I think a trade we actually took at the time was this shooting star type candle here. I'll try and zoom in and make it a bit clearer. With the 98.45 above it, this shooting star type candle was post at this significant resistance level we had back in April. So I think this is one we actually all saw, 3 of us, and we managed to capture a good move to the downside here. I think actually we traded that back up too. But going on to where it's at now is we've had this kind of breakdown below the previous swing low. And this has retraced right back into this 61.8% fib level. We've had this really significant candle here. It's kind of a, I'm not going to pronounce this right, Mazu, you know the one I mean.
So
that's the one. Marabuzo, yeah, that's the one. Type candle here, which it coincides again with just touching the 61.8 fib that I really like. It's one of my favorite fibs to use, and closing below the 50 MA. So this is, I believe, a trade we've got on our dashboard at the moment is this short of Micron. Could have had the stop a little bit higher on this, but then it would have been tough to kind of get a good risk reward. So I think we went for having a bit more of an aggressive approach, hoping for an extended move lower. And so far we just got tagged into that, and we'll kind of see how that plays out. But I really like the volume here as well. You know, that's something else I like to look for. It's this significantly higher volume. So we'll see how that one plays out. But some interesting stuff on Micron, and we'll kind of keep track of that today throughout the US jobs numbers, and we'll maybe check in on it next week.
Nice
one.
Spot, Jamie. Okay, let's have a quick look at the gun to the head trades then. So just again, to familiarize what it is that we do here, each of us pick a trade live on the video each day. Each trade idea must have a stop and a target. All ideas are placed at market, and the ideas will expire at 9 p.m. or when the stop or the target is reached. And we keep track of these ideas on our spreadsheet. Just bring that up quickly to see how we did yesterday. Steve's already given us an insight into his trade idea, which was the oil. Desperately unlucky, really. Just a bit too tight on the stop. So sadly was a loss. I had a tiny loss on Aussie yen, which didn't do anything. And Jamie, you had a nice 1R win on Nikkei. So
nice
congratulations to you.
Thank you.
Yeah, the shoulders feel a bit lighter this morning, Jamie.
Yeah.
I'm coming back strong. Here we go.
Yeah, so Jamie's only 4 trades into to this. So it's your first week doing this with us. And you know,
smashing us on the win rate.
Respectable numbers.
Yeah, I should just quit now. 50%. I'll take it.
Okay, so Steve, you've given us an indication of what you're looking at already. Do you want to confirm that for us?
Yeah, I'll let's get the levels. Stop, obviously, stops too tight. Stevie is going to go for it again. How many is that? That's a 4-1. I was looking at it a bit more than that, actually. Yeah, I'm going to go 6-1 risk reward on this bad boy. So
Friday
stop
special.
Stop is 60 ticks away, which is very, very tight in the Nasdaq on non-farm payroll day. So do be aware of that. This is just a bit of fun, but I'm probably going to trade it myself. Yeah, so I'm going to get short at this level. The stop is at the stop's just below 15,000. I've got to have the stop a bit tighter than that, higher than that. I've got to go above. Oh, yeah, I've got to go above 15,000. That's really tight. It's like, okay, let's redraw this and give it a little bit of room. It will take the risk reward back down to 5-1 risk reward on this. Getting short Nasdaq. Stop at 15,006. Targeting 14,586.
Lovely.
Well, we'll
Good
see.
luck. Jamie, what you got?
That's a good question. I did have something looking quite nice, but it seems to have changed in the period we've been filming, which is quite often the case. But I'll have a punt at this, and we're always kind of talking about head and shoulders here. We love a good head and shoulders.
Punt? We don't punt.
Do we? Is that the wrong word? Punt? Maybe.
No, it's the absolutely correct
not
word.
roll of the
This
dice
is,
either.
very much a punt, but
yeah. I mean, this we talked about the Australian currency a little bit. We've had this really nice run up, but to me, I mean, just forget about this last 4 hour candle. But prior to that, it looked like it was really starting to break down. We were getting weak reactions from this level here. So I was gonna, I'd rather set a break of this support level, honestly. But you know, gun to a head, we know the drill. I'll take a bit of a crack at this. It's not kind of ideal, but I'll try and sell this here. And I might just have a really conservative. Is that going to work? Probably not. We'll go above this recent high, and you know, let's go for a big break. Why not? It's non-farms. Let's go. That's a bit crazy. We'll go. I tell you what, I'll bring that a little bit higher up there. That'll do. We'll try and sell this here. I'm not overly confident of this one, but we'll give it a go. So this is a nice 3.52 risk reward. The levels are, let's just get these on the screen. So I'm selling at 0.7501. Take a profit at 0.7418, and the stop is at 0.7525. Again, not feeling super confident about this one, but I've got a gun to my head, so I don't want to get shot.
Yeah, fair enough. Good luck, mate. You've spooked me a little bit on the trade idea that I'm looking at based on that, but I was going to go with New Zealand dollar, US dollar, but on the upside. And the reason for that, as I spoke about earlier in the week, I saw the potential for an inverse head and shoulders setup on this. So we saw a break above the neckline on the 22nd. Choppy trading since, arguably, you know, a bit of a pullback. Still some potential for that to play out, I think. And if I look at the intraday charts here, we are trading in a bullish channel. We've had a decent pullback over the last couple of days or so, and we are seeing a nice push to the upside today. So I'm going to buy that at 69.32, targeting 69.95 with a stop loss at 69.10. So looking for 2.8R on that one today. So obviously both of mine and Jamie's trades are linked to the dollar, as is Steve. So, you know, we could be in for some pretty big moves on these markets today, as it is non-farm Friday. Okay, good luck if anybody's following those. Just to confirm the data that's due out today. So 10 o'clock UK time, we've got the Eurozone consumer prices. At 1:30 UK time, we've got the non-farm payroll number. And then at 3 o'clock, we've got the US ISM manufacturing figure. I did actually want to take a quick look at our economic calendar, just to sort of drill down a bit further into these data points that are due out today. So this is the trading or economic calendar provided by Acuity Trading in conjunction with Dow Jones. So a little bit of an alternative take, shall we say, on the typical economic calendars that you're probably used to. What we're trying to do is offer a bit more insight into these big data numbers. So we've got, first up, the Eurozone flash estimate Eurozone inflation forecast is for 6.9. The previous was 5.8. This is due out in 49 minutes time. We can see here what assets it's likely to impact, and also we can see here the history of the inflation readings going back to the first quarter of 2021, and we can see the dashed line is the forecast, and the green dots or the red dots are the actual. So if it's a red dot, it's coming below estimates. If it's green, it's coming above. And as we can see, in most instances, in recent times, the inflation number or print has actually come in above the analyst's forecast. So this is what we're forecast to see here today. As we mentioned, 6.9%. And if it's going to continue along this theme of coming in higher than the expectations, then we may actually see a print closer to or above 7% on inflation today in Europe, which would be not great overall, I don't think.
What about non-farm payroll? What does it say about that?
Okay, so let's have a look at the US employment report. So we can see here the forecast today is for 490,000 jobs. Previously, that was 678,000. And if we take a look at the history of the forecast versus whether it came in above or below expectations, it's pretty choppy, actually. As you know, this is, I guess, why we see so much volatility on the non-farm payroll reading, is because the forecasts tend to be quite wide from what the actuals come in at. Can't really get anything from that.
No. Well, and so it also on the right hand side, it tells you what an hour after trading, generally the euro US dollar's been up slightly.
Yeah.
Even a day after it's been slightly positive. What about Nasdaq? What does it say about Nasdaq? Can you just bring up Nasdaq?
Yep, so these are the associated assets. If we look at US tech, we can see that typically it has a positive impact on this market over the last occurrences that we've calculated it over.
Oh, positive.
Yeah.
Does that take into account the Steve O'Hare factor or not?
No, obviously not.
Okay. I've got a little screen just to show us, which I've just brought up. And this is the market alerts that are also produced by News Sentiment. And if we go onto US Tech 100, we can see that over the last 24 hours, News Sentiment has moved positively. However, over the last 7 days, we've got a 7-day EMA on News Sentiment here in the blue line. It's moved negatively. It got quite close to actually getting up towards flatlining at 0, but it's moved negatively. This has led to a market alert being published. You probably can't see what it says here. Daily News Sentiment is moving lower, and in 60% of the last 10 occurrences, prices have fallen within 9 days. So we've got a selling market alert along with the Steve O'Hare selling Nasdaq on the technical front. So Nasdaq beware, and non-farm payroll beware.
Great. Well, hopefully that's a nice bit of additional insight that we offered there in those tools. So if you want to find them, there's a few brokers that are offering them in conjunction with our full signal service. Check out our socials and website for more information.
Nice, very professional,
Ooh.
Joe.
Yeah,
almost signing me up there.
Yeah, good.
You almost got a like out of me there.
Superb. Okay, well, gents, I think we can wrap it up there for Friday. As we've reiterated a couple of times, it's likely to be a pretty choppy one to end the week. So do be careful if you're trading, and make sure you use appropriate risk management. We'll be back on Monday.
Yep. Cheers, everyone.
Cool.
Have a great
Thanks, guys.
weekend. Bye-bye.